Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about EURUSD because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice is that the market is currently testing a quite strong area of previous monthly support, which is now term resistance. In fact, from here, the market created this rejection to the upside, even though we had very strong bearish price action, showing that clearly the market reacted to this zone. And since we have after that broken below the level with this impulse to the downside, as you know, previous support, once it is broken to the downside, is turned resistance. So what the market is actually testing here is previous support turn resistance, and we could expect a potential rejection lower. We can also notice that since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse. And if we do that, we can notice how the market has just entered the zone in between the 0.618 and 0.786 of the Fibonacci taken on the monthly impulse, which is a quite strong monthly resistance area. However, it is also important to keep in mind that and point out that the market hasn't yet reached the real resistance. Now, when you have a zone like this, you don't really know where the market is supposed to actually test and reject most of the times. What you can do is to identify this zone, go down on a line chart. Now, with this trick, what you will be able to identify is the actual previous support and resistance, which is this angle here. And we can place a horizontal ray at this area. Switching back to candles, what we can see is that the market hasn't tested this zone yet, meaning that there is the possibility for a bit more bullish price action before then getting a potential rejection lower. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, it is quite clear that the market went from creating a series of lower lows and lower highs to now creating higher highs and higher lows. So we had a complete shift of the weekly trend. So at the moment, from a weekly perspective, we have a bullish trend, meaning that we could expect a bit more bullish price action to really go and test that monthly resistance that we have just identified using that horizontal ray. Going down on the daily, what do we see? Now, from a daily perspective, first of all, I spoke about EURUSD a couple of times in the past. I spoke about it after this impulse. I explained all the reasons for which we wanted to see first a correction, and then from here, more bullish continuation. And in fact, that is exactly what the market gave us. Then we had the creation of this M pattern, and I made a full breakdown explaining all the reasons for which we could expect a potential rejection higher. And again, that is what the market just gave us. And by the way, I will link in the description both these previous analysis, so you can go and check them out for more free education. However, what we can notice at the moment is that from a daily perspective, the market is testing exactly the previous high. And as we are testing the previous high, we could expect from here a potential rejection lower. We do not know if the market will manage to create that break to the upside. But before we go further on the analysis from a daily perspective, let's first go and see what we have when it comes to the commitment of traders. So the COT data, which is what the non-commercials and the biggest speculators in the market are doing. Now, if we check the data for the euro, what we can see is that with the last reports, net positions have been increased massively. We went from having minus 47k net positions all the way up to now having plus 112k net positions, with 7k longs added with the last report, reaching 239k longs compared to only 126k shorts, which is making EURUSD quite bullish. What this means is that if here we actually do get a break above this area, there is the possibility on the retest to see more potential bullish price action to actually be developed. We do not know if the market will break that zone because from here it could easily reject lower since we are at the previous high. But if we do get a break above the area on the retest, this would be a good zone, inside of which we could be looking for a potential rejection higher. Is definitely a possibility. So if the market will create this break on the retest, how we could be approaching a potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIB market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive promotion in which you have both a huge discount on the upfront price of the mentorship program all the way down to 97 euros for lifetime access. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that there is still time to join before the timer goes to 0 and this offer ends. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway and the price will go back to normal. So I do suggest that you take advantage directly from here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.